Okay, now let's try solving a question. Khalid is a trader on first day on 18th April 2019. He was informed that Aiden, a credit customer who owed 600, has ceased trading, so he has stopped his business for some reason. His business is closed down. Aiden paid Khalid 240 by a check. So Khalid is the one who's the seller. Okay, so Khalid is the seller. Aiden is the customer. Aiden paid Khalid 240 by check. Okay. The remainder of Aiden's balance was written off as irrecoverable. The remainder was not recoverable. What does that mean? This is the new term, okay? So previously we used to say bad debts. Now this is the new terminology for your IGCSE syllabus. The remainder of Aiden's balance was written off as irrecoverable. So the total was how much was the balance? 600. So in both the cases, Aiden, look, so in first case, Aiden paid us 240, Aiden credit, and our bank uh, debit by 240. Now the remainder was what? Irrecoverable. Now irrecoverable or bad debt is treated as if he paid. Okay, because his liability is being reduced, our trade receivables are being reduced. Like it's the same way that a bank's entry is made. So in point of in Aidan's account, he doesn't owe us anymore. Okay, his liability is being decreased from our point of view, and the by the amount 360, 600 minus, how did I get this? 600 minus 240, because 240 he paid, that's good, but the remainder he didn't pay. Out of 600 he didn't pay this much. Where did it go? Bad debts. Or oh, okay, I'm sorry, you are not supposed to write bad debts. Okay, try to make it your habit. Okay, of try to make a habit of writing irrecoverable debts. Irrecoverable, it's a long word. Irrecoverable debts. Okay, you can even write bad debts, that's not wrong, but still, like irrecoverable debts, or write bad debts, that's all right, because it's not a big deal. 360. But even though the new term is irrecoverable debts. Okay, next he says Khalid maintains a sales ledger control account. Previously explained you what is a sales ledger control account. If you have a confusion, you can go back to it, and if you have a doubt, let me know. Okay, the following information is available from his book. Sales ledger balances. Okay, these are the balances you will use for balance brought down in your sales ledger control account, in balance brought down. One of them is credit, so one of the balance brought down will be credit. Next we have, these are the closing balances. Okay, these are the closing balance carried down, balance brought downs, and these are the some details. Now state, we'll come to this, we won't need this for this current question. State two reasons for maintaining control accounts. Do you remember from the previous explanation? It reduces fraud. It shows us total trade receivables and total trade payables, which helps in preparation of uh, books. Sorry, the final accounts. As it assists, it helps in locating errors. Okay, it is a it shows the accuracy, the arithmetical accuracy of ledgers they control. Okay, so if it's a sales ledger control account, it shows the accuracy of sales ledger. If it's a purchase ledger, it shows the accuracy of purchase ledger. It provides the total figure of trade receivable, and yeah, we know that. Um, it helps in preparation of financial statements. It helps to reduce fraud. It's a summary for trade payables, trade receivables. All of these points are acceptable. You can write any of these two, whatever I just mentioned. Okay, I listed them. You can write any two of those. So I'm not going to write them. It's going to take some time then. Explain what a contraentity would be used. Why, when a contraentity will be used in control accounts. Now, when you are engaging in a trade with a similar with one person, you are also buying, you are also selling to him. Okay, this may occur when a business sells goods to another business and also buys goods from that business. Okay, So rather than each business sending other a check, they agree to set one off against each other. So going to repeat this, and this is what you're supposed to write in the answer. This happens when, or you can say contra entry occurs when one business sells to another business and also buys from that business or purchases from that business. So rather than sending each other money, they set off against each other. I explained you with an example in a previous one, okay? So let's say X and Y are traders. X buys from Y for 1,000. So X buys goods worth 1,000 from Y, and Y buys goods worth 500 from X. Who bought more? X bought more. X would just pay 500 to Y. So remainder is 500. Y wouldn't pay anything. X would just pay 500 because actually I explained this in detail in the previous class. You could go there. Okay, so that's what contra entry is. So instead of sending checks to each other, they just set off an amount. Now let's prepare sales ledger control account. As I told earlier, it's treated as if it's a single, sorry, as if it's an individual, like what would be debit, what would be credit, that's being decided on the basis of what would you do in your individual customers accounts. It's your customers accounts, okay? It's You can call these are total debtors. You could call this total debtors or total trade receivables. Remember, only the credit ones, not the cash. Remember that. Khalid maintains a sales ledger control account. The following information is available from his books. Now, on 1st April 2019, the date is 2019, April 1. Okay, April 1, yes. It's the opening balance. So, balance carried down. No need to write short forms in your exams. It's just for explanation. So, we have this, this, this. Remember, it's total of individuals. As I said earlier, it's total of individuals. Okay, not um, you won't write individual balance series, of course, balance CD, balance CD. You will write a total of these three. And why I'm not including this one? Because it's a credit. So there is also a credit balance. 19 April 1. Make sure you write these in a better handwriting than mine. Balance carried down. Here it's 60. No need to make any calculations. You will total these. It will be 1800 plus 450. 1800 plus 450. 2250. 2250. I also gave you a format in the previous class, remember? So this is involved. Now in that format it said that credit sales are supposed to be debit because in sales account they are credit. In this account they will be debit. And for the month it means it's at the end of the month, April 30. Credit sales. Remember, not cash sales. Credit sales 3315. Okay. Cash sales won't be included. They won't be included in your control account. Bank receipts from credit customers. Now, whenever a credit customer pays you something, and an individual customer pays you something, what do? Bank credit, and the bank account itself will be debit, but in this sales rate control account or a debtor's account will be credit because now whenever he pays the amount, he doesn't owe you that anymore. That's not your trade receivable anymore. So it reduces your current asset because you are already it reduces your trade receivables. It doesn't reduce your current asset. It reduces your trade receivable because you're not going to get that money anymore. Okay, it's not your debtor anymore. 1930. Next, dishonored check. Now, when a payment is made here, so if it's an opposite of payment, it's unaccepted. So this would be 40. You write bank, and in the bracket you write dishonored check. Then we have sales return. Since sales were recorded over here, we would write sales return over here. So how much is it? 75. Next, refund paid to Sonia. by check. Okay, again, in the previous format, I told you refund. Now, in the bank account, a refund would be credit. So here it would be debit, refund. No need to mention Sonia or anything like that. You just write refund, or you can actually write. You should actually write bank. Okay, first write bank, and then in the bracket you can write refund. That would be 60. And then bad debt. It's as if he made a payment. It actually reduces our trade receivable. We won't receive this amount anymore. This bad debts amount we won't be receiving anymore. So bad debts will be 360. Right. Okay. Now finally, everything is done. We've covered everything. Instead of this, sorry, not including this because this does not appear in your control accounts. Any cash transaction does not appear in the control account. Not any cash transaction, sorry, not any cash sales won't appear because bank is also a cash transaction or a bank transaction. It would appear, but the cash sales won't appear. That's the thing. And now these are your closing balances. Since they are the opening for the next month, it means they are closing for this month. And they are a debit balance doesn't mean you have to record them on the debit side. They are being brought down on 1st May. They are brought down as a debit balance. So on 30th April they'll be carried down as a credit balance. So balance carried down. This is brought down. And this is also brought down. I'm sorry for this one. These both are supposed to be brought down, not carried down. These are brought down from the previous month, and this will be carried down to the next month. Okay, so we have the balances 800 plus 340 plus 2100. The answer would be 3240. Let me recheck that once again. 2100 plus 800 plus 340. Yes, 30 to 40. Next step, you would just total this column, total this column. You would get 5665 on both the sides. 5665, 5665. And of course, balance brought down would be 3240. This would be your balance brought down. When will it be your balance brought down? On 1st May. It's already given in the question. Now it's a debit balance, right? Now it makes sense because as a carried down, it would be a credit balance on 1st May. It's not a difficult concept actually. It might look a bit complicated if you're doing it for the first time, but you'll get used to it. So what is this? What does this amount tell you? What does this amount tell you? So on this date, these are our total debtors. These are our trade receivables. All right. Now the last part of this question. Khalid's financial year ends on 30th April. So this is 30th April, right? On 1st May 2018, he had a provision of doubtful debts of 120. Previous year, so far it's 120. He decided to maintain the provision at 5% of trade receivables at the end of each year. Prepare the provision for doubtful debts account for the year ended 30th April 2019, showing the transfer to the income statement. Balance the account, bring down. It's very easy. That's why it's worth 3 marks. Now, if you should know that provision for doubtful debts must have a balance carried down of what of a credit. It should be a credit. So it's the opening. It's the first day of the year. May 1st. On the first day of the year, balance brought down would be 120. Okay. Now remember how we make adjustments or for the year end entries for in the provision for doubtful debts. We calculate the new. What do? We calculate the new provision. How do we calculate the new provision? 5% of trade receivables. What are the trade receivables? 3240. We calculate it in our sales ledger control account. So this year's trade receivables 3240 times provision for doubtful debts. 3240 times 5% is 162. Now what do you see? What do you notice? Actually, right away you write it as a balance carried down and balance brought down. 160 balance carried down. End of the year. Write the end of the year's date. What is the end of the year date? It's 30 April 2019. April 30, 2019. This is what you would put right away, but you can think logically, and the balancing figure would be income statement. And if you think logically about it, your provision for doubtful debts has what, increased or decreased? It has increased by how much? By $40. It has increased. So this is supposed to be your expense. Where if it had decreased, that would be your income. So in the income statement, it will be transferred as an expense. Statement, it will be transferred as an expense, 40. Even the balancing amount is 40. So these are two ways to think about it. So if I didn't know about this 40, this figure, I would just write income statement and I would just balance my accounts. So here, and they're saying balance and bring down the balance on 1st May. So you must bring the balance down on 1st May. Um, Balance brought down. So 60, 160.